Good morning. It's Friday, the 31st of May, and this is Govindraj Ethiraj broadcasting and streaming from and headquartered in Mumbai, India's financial capital. Our top stories and themes for the day. First, this is the last day of May, and tomorrow is June. And of course, 3 days and 2 trading sessions later are the results of election 2024, the day or moment you've been perhaps waiting for. So here we go. Markets are back to feeling jittery, and is talking up the market counterproductive? Monsoons have arrived earlier, interpreting the economic and agri-economy impact. Foreign direct investment into India slows down. And now orange juice prices hit record highs, expect more mixed fruit juices. Air passenger demand is now growing for 36 consecutive months, says IATA.
This is a core report with Govindraj Ethiraj.
The stock market's final jitters. It's a slog overs, to use some cricketing cliches, since we love cricket perhaps as much as we love politics. The markets are back to feeling jittery now, technically for the fifth day since benchmark indices fell, and the numbers, or rather more of those numbers in a moment. So firstly, India is not alone in this region. Asian stocks fell about 1.3%. That's tracking the overnight drop on Wall Street on increasing bets that global interest rates would stay higher for longer, Reuters reported. So back home, I do hope India's politicians realize the markets have been nervous of falling almost ever since they've been trying to talk it up. Markets will focus on the number of seats won by the party they expect to win, which is the BJP, and compute on the basis of that. There's nothing one can do before June 4th and should not in that regard. It's also possible that the heat is affecting people. For example, stock brokerages are putting out extreme situations on how billions of dollars will either come in or fly out, depending on what happens on the 4th of June. Perhaps they, in this case, Nomura, should focus more on identifying long-term stocks and buys, which they, I'm sure, are good at. Another brokerage, CLSA, put out a list of Modi stocks, referring to companies like Reliance Industries, Bharti Airtel, controlled by Sunil Mittal, Indus Towers, and shares of some PSUs, or public sector units like ONGC, Indraprastha Gas, NHPC, which analysts at CLSA have termed as Modi stocks in a recent report, and having outperformed the Nifty 50 in the last 6 months. CLSA said that against the 14% rise in the Nifty, the average up move for Modi stocks has been 50% in the last 6 months. Now, this may be the basket which continues to rally the most if the market celebrates a strong election result for the ruling party on June 4th or vice versa. Now, all of this is interesting because many of these brokerages, whether publicly or otherwise, have actually already, maybe through actions if not words, priced in a victory for the BJP. Now, on the other hand, of course, foreign institutional investors have been selling, but that's equally to do with some of the valuations and the fact that I'm sure, as I'm told and going by past history, they will return in the first week of June. So the Modi stocks are obviously linked broadly to public expenditure and in some ways policy. While the arguments for the selection of such stocks specifically are not necessarily biased, the optics of this for a market that would like to call itself developed and one of the world's largest economies or aiming for it is quite unfortunate and, of course, avoidable. More on this in a moment. Meanwhile, the markets fell for the fifth day. The BSE Sensex sold off faster in the second half of Thursday, closing 617 points or 0.8% down at 73,886. The Nifty 50 was below the 22,500 mark at 22,489, down 216 points or about 0.9%. The reason I'm quoting those percentages is because if you put them against what's been happening in the rest of Asia, then we are mostly in sync. Oil prices fell for a second session as traders watched for US stockpiles data and an Organization of Petroleum Exporting Countries Plus meeting over the weekend for more clarity on supply and demand, according to Bloomberg. Benchmark crude, that's Brent, was trading at about $83 a barrel after falling about 0.7% in the previous session. And then international, and more specifically Wall Street, the Dow Jones Industrial Average opened lower on Thursday, extending recent declines. An unexpected surge in bond yields has put pressure on stocks in recent days, though they drifted lower overnight and fell further Thursday morning after the release of somewhat soft economic data, according to the Wall Street Journal. The economy, that's the US economy, is cooling, which would make it easier for inflation to ease to the US Federal Reserve's 2% target. Back home, something that the markets would obviously greet with optimism is the arrival of the monsoons, or rather early arrival. Whether that happens today or at a later date is another story, and more on the monsoons and their economic impact in some detail shortly. Now, there are some larger questions which I thought I would address at the beginning of this show. What does the economy look like beyond elections? I know it's a very broad question, but bear with me. Specifically, will it be more dependent on public investment or private investment, since that's the larger message the Modi stocks reports and other such reports are trying to send, or so I think? Is that an ideal situation then? And why are politicians talking up the market right now? So I put these questions to veteran economic journalist and author Shankkar Aiyar, and I began by asking him why the political class was referring to stock markets so often in recent interviews, and of course, how he was reading all the other signals that we've been talking about.
I mean, it's not fundamentally about the economics of it. It's mostly about the politics of it. So point one that you must recognize is that what happens in the stock market does not stay in the stock market. It's a kind of a signal that people receive saying that those guys in the stock market who have skin in the game, who have money in the kitty, if they think it's going one way or the other, that's the signal that maybe the regime is doing well or badly, which is what it seemed to be the first case, and then there was some recovery. So that's the first part of it. The second part of it one must recognize is that more and more people are joining the investment ecosystem. So I might say mutual funds, demat accounts. You see, the numbers are all rising. I mean, this is a country where every 2 million new SIP accounts were added. So we are also conscious that what signals they give matter to the investors who they believe are aligned to their cause, the idea of Viksit Bharat. So their statements follow. One wouldn't worry about these are normal signals that politicians have to interpret and broadcast. I won't say anything more than
Okay. So the other point is, which you've also touched upon in your column earlier this week, is about the signal and the noise, which of course is a very old term now. But the point is, I think, in this context, that the discussions and debates that we see have little or nothing to do with data. So much so that people themselves are not really relying on data to either make a decision or potentially make a decision, or even come to the, let's say, the table for a seasoned or a reasoned argument.
that. The old proverb, adage, maxim, whatever you cliche, whatever you call it, is that don't let facts come in the way of a good story. So everybody out there in the campaign theater likes to tell a good story. Voters are interested in a good story. Voters want to believe. I don't know whether they necessarily want to know. If they wanted to know, then we would have a different kind of debate. So it started off okay, and then the manifestos were discussed, almost the unthinkable. I wouldn't imagine that manifestos would have been discussed in detail like we had. But thereafter, it went into the usual syllabus of the subject, which is basically throw mud at each other, say things that cannot be proved or disproved. The general tendency has kept with the trend over the last few years is when it's election time, collect a lot of mud, collect a lot of innuendos, insinuations, euphemisms, and say things that, have pretty much little to do with what might happen after a government is sworn in. I mean, there are all kinds of rumors and speculations being made about reservations, about constitutional change. I mean, this whole hype about 400 seats means constitutional change. The system, the constitution doesn't require you to have 400 seats to amend the constitution. It's a simple majority, and one third of the states have to ratify it. So anyway, so this is all. WhatsApp University has a lot of students and professors now. So we have had fun.
The other question is, several brokerages are putting out reports linked to the outcome of the elections. And one brokerage, CLSA, has gone a step further and has analyzed what it calls Modi stocks, referring to the Prime Minister. Now, my question is this. Now, when you start positioning things as either Modi stocks or non-Modi stocks, is that sending out a signal, or isn't there a risk of sending out a signal that only companies and stocks that are linked to politicians and the Prime Minister in this case will do well? Or put another way, what is the story that this really conveys to particularly investors who are sitting far away?
Well, I mean, there is no law against being stupid. So somebody believes that only these stocks will do well, then you can't do very much about it. But here's what it is. There is a certain belief or estimation or assessment that certain sectors will do well if the Modi government comes back, and when it comes back, it will reinvest in infrastructure, public sector capex would go up. So there has been this thesis that has been there, and Mr. Modi himself in Parliament spoke about stocks, and then he has said that when the election results come, we will have a biggest bull run, and all that stuff. So what are these brokerages doing? They have a bunch of stocks which they have to brand in one way or the other. And so they have to align it with some fashionable recipe of the day. So it's like the South Indian restaurants who sort of package and repackage idli as Kanchipuram idli, this idli, podi idli, mini idli. Well, it's a simple thing that they want to present to you a bunch of stocks which they think you should get interested in. And then the label. Can't say that there is any great strategy or intelligence sort of propping that. I mean, it's generally information and kind of forecast. So forecasts are going to go wrong, all right. So people would sort of look at those shares, and it gives them a talking point. The brokerage gets a talking point. People look up the headline, and you looked up the headline because he said, oh, these stocks. If he had said that, this is ROE stocks, you wouldn't have looked at it.
So, Shankkar, you wrote a piece a little while ago about public sector stocks and how public sector stocks were doing well. And that's a theme that the government actually later, if I remember it chronologically, picked up on as well. And it is based on fact. I mean, the fact is that public sector stocks have shot up and have done well. I think the larger question here is that when you look at the Indian economy, is the opportunity in some ways now more in and related to public spending? And therefore all of this that we are seeing, including the Modi stocks and so on, or is there an equal or larger role for private consumption, private investment in coming years too?
Well, Govind, if you remember history, India started on the Harad-Domar model, which is state-led industrialization. So the economic theory of state-led industrialization. And that was because at that point we didn't have private sector capacity to invest. What's been happening in the past few years is, particularly after COVID, is that the government had to fund the investment cycle. So it boosted expenditure on infrastructure and other, primarily defense and infrastructure. So what they hope is that this will trigger the return of private sector investment. And private sector investment has been shy for a couple of reasons. There is the cost of money, because this is now, we assume, very high interest rate regime. Prime lending rates are very high. The second part, I think, is that there is a certain uncertainty, or let me put it this way, there is certainty about uncertainty in the rural economy. Rural wages are down, rural consumption is not picked up. We had a GDP growth of 7.6%, private family consumption was just 3%. So there is a worry that, it's fair enough, they're dealing with shareholders' money, it's not like all of it their call. And so they want to sort of see evidence of the economy picking up before they put their money in. So the government will have to persist in boosting infrastructure. The more important point in the public policy domain is that it is not that these investments are not required. We are not creating ghost towns like in China. These are investments required. I dare say that we need more investment, more connectivity, more ports, more railway lines, more electrification, more renewables, all of which the government has to propel. So, and as far as that, they are doing it, and they're using the public sector enterprises as the vehicle to do this. There is a scope or a case for public sector shares. Are the public sector companies, all of them, doing well? Well, in domains where there is a private sector active participant, you have to compare the performance of, say, Jindal Steel or Tata Steel, and you know the story.
Right. Shankkar, thank you so much for joining me.
Always welcome, Govind.
Foreign direct investment into India has fallen further. Foreign direct investment inflows into India declined about 3% to about $44.4 billion for the year ended March 2024. This was attributed in turn to a slowdown in services and computer software investment, construction activities and development, particularly infrastructure and power. This goes back to the points we were discussing earlier. Saw a FDI upswing in 23-24, bringing the quantum lost out by the usual FDI inflow sectors like services, computer software, hardware, drugs and pharmaceuticals, and even chemicals, according to NDTV Profit. FDI inflows stood at about $46 billion for 22-23, according to data released by the Department of Promotion of Industry and Internal Trade on Thursday. The top inflows were from Singapore at about $12 billion or 26%, and Singapore comes behind Mauritius in terms of total FDI inflow in the last 2 decades into India. Monsoons are early and assessing the impact of monsoons this year. Monsoon rains hit the coast of Kerala, India's southernmost state, on Thursday, 2 days sooner than expected. Rains usually arrive in Kerala around the 1st of June and then move northwards, helping farmers step up planting of crops like rice, cotton and sugarcane, amongst many others. The monsoon delivers about 70% of the rain that India needs to water farms and recharge reservoirs and aquifers. Nearly half of India's farmland without irrigation depends on the annual June to September rains, Reuters summarized. Now, the rains will obviously bring relief from the severe heat waves the country is experiencing right now, but only in some parts. So the monsoon set in over Kerala on Thursday, 2 days ahead of its normal date, and has advanced into most parts of northeast India, said the Indian Meteorological Department. Weather scientists said Cyclone Ramal, which swept through West Bengal and Bangladesh on Sunday, redirected the monsoonal flow towards the Bay of Bengal, potentially contributing to the early onset of the monsoon over the northeast, according to Business Standard. In a bulletin, the IMD said that southwest monsoon has set in over Kerala and advanced into most parts of northeast India today. That's 30th of May, 2024. Kerala, by the way, has been receiving heavy rains for the past few days, resulting in surplus May rainfall, according to the Weather Data Office. The IMD, as we've been discussing here, has already predicted above average rainfall this year. Rating agency Crisil, meanwhile, has said that some areas and crops could see weaker rains for the second straight year, and if they do, they could suffer more than others. Crisil has created a deficient rainfall impact parameter, or DRIP index, in the past and says it will track this closely with rainfall this season. Crisil said that its results from last year's DRIP show that some areas and crops did suffer in 2023 despite a normal overall southwest monsoon, but an uneven distribution across states. So even if the overall numbers looked fine, all states were not getting the same amount of rainfall, and obviously all crops. Of the states expected to receive deficit rains this year, Jharkhand, Bihar, West Bengal and Odisha require monitoring as they were impacted last year as well, said Crisil. And the reason this all matters is this. Rice, tur and coarse cereals saw last year's uneven rains impact production and pushed up inflation rates. Rice, for instance, saw an average inflation rate of 12% in fiscal 2024. Tur, that's pulses, saw about 33.4% or about 33%, and coarse cereals about 11%. I reached out to Dipti Deshpande, principal economist at Crisil, and I began by asking her how she was looking at last year versus what was being projected this year, and then in the context of the larger agri-economy impact and, of course, food inflation.
So, I think last year's southwest rains that happened between June and September were overall, the verdict was that rains were normal. But if you look deeper into last year's rains, what comes out is that crucial periods of July and August, which matter a lot from a sowing perspective, did see weaker rains in some of the, major kharif growing states. And they caught up later in September, but a large part of the damage was already done. Now, compared to that, if you look at this year's rain forecast that's come by, we again have a prediction of overall normal monsoons, which is good. But I think what warrants a little bit of caution is that the east and northeast parts of India are expected to have a little bit of below normal rains. And that's worrisome because some states in that region also did suffer last year. So I think that's the big broad thing that comes out from the forecasts that are out so far.
So several things have been forecast. One is that it's going to be above normal, the overall monsoons for 2024. Second is it's arrived 2 days earlier. Does all of that mean anything?
Yeah, I think above normal is good, but I think that information isn't enough. We need to look at, firstly, regional coverage. We need to look at monthly coverage. So information on monthly coverage is not quite available now. What we know is that June is going to be normal, all India, but there could also be higher than average temperatures. So some little bit of heat wave continuing into June could be something to look at. But I think what's also important is that the north and eastern belts, if you look at another forecaster, the private forecaster, that is SkyMet, they've looked at some states and they've highlighted Bihar, Jharkhand, Orissa, and West Bengal as some states that could see a deficit rains during the peak months of July and August. Now, it's important to note that last year, these were the four states, and in addition, we also had, say, Maharashtra and Karnataka, which saw weak rains. So, 2 consecutive years of rainfall deficit in some of these states and for some of these crops cannot bode well for the economy at large. So, as of now, there's not much to worry, but I think there are areas that have been highlighted where we need to monitor closely.
And food inflation is one of the areas which I'm sure we are monitoring. If you break that down, there's vegetables, there's cereals and pulses. So both cereals and pulses have been high, as have been vegetables. And is there anything at this point that tells us or could tell us where all of this could go?
So, see, as of now, we are going by the assumption of normal monsoons for this entire upcoming rainfall season. And with that, we are forecasting food inflation to come down. There's also another reason why food inflation should be lower this year is because it naturally has a statistically high base and that would allow. The second thing that we've been tracking is that pulses tend to have an up cycle and a down cycle, and they're now on a regular down cycle. So we do expect some sort of a softening to come in there. But I think the real big worry comes in from cereals, where the inflation rates are pretty hard, and also vegetables, where we've seen over the last several years now that, extreme rainfall or extreme weather conditions in any way tend to hit most of these vegetables. They're most susceptible. Rather, in the last 2 to 3 years, as one of our reports from April pointed out, they've added the most in terms of the volatile components of food inflation. So we really need cereals and vegetables inflation to soften over the next couple of months. And for that, we need healthy, timely, and well-distributed rains.
The broader question, the economy, that's India's economy is also dependent on monsoons in a broader sense. And any insights on how that looks like or is likely to look like?
Probably, each year we look at southwest rains because they're overall required for filling reservoir levels, replenishing groundwater, watering our fields, all of that. But I think this year, one of the reasons they need to be closely monitored is because we want the agri economy to do well. Last year's full year number was less than 1% agri GDP growth, and we want that to start doing well this year. There are some green shoots in the Q4 because Rabi sowing was good. We are expected to see some improvement in agri growth, but for that to sustain, we will need a good rainfall to come by. So I think number one, for agri incomes to lift, for rural demand to improve, we need good rains, and for food inflation to come down, allowing overall inflation to come down, and therefore make room for monetary policy rate cuts, we need good rains.
Right, Dipti, thank you so much for joining me. Power demand peaks again. India's peak electricity demand is setting new records thanks again to rising temperatures. India has reported now a maximum demand of 246 gigawatts on May 29th, according to data published on Thursday by the Grid Controller of India and quoted by Bloomberg. The previous high was about 243.3 gigawatts reached last September. Some power shortfalls have been reported across India during evening periods when solar generation isn't available, though daytime demand has so far been met, according to that operator. Now, that is consistent with what energy analysts have been telling us, because while daytime consumption has increased, so has supply thanks to solar energy. The rising consumption has forced the government to revive output at gas-fired power stations, boosting demand for the fuel by as much as 12% from a year earlier, the managing director at Indraprastha Gas told Bloomberg. Reliance launches a Jio Financial app. Jio Financial Services has introduced a new super app for digital banking and payment services that is pitched against the likes of Amazon and Google, and I'm assuming other industrial houses as well. The company announced the test version of its platform named Jio Finance for UPI transactions, bill settlements, as well as insurance-related services. Jio wants to get into mutual fund loans and mortgage lending, it said in a statement on Thursday. There are super apps from other business groups like the Tatas who boast of wider consumer-facing products and services at this point, ranging from hospitality, hotels, airlines to stores, beverages, and online commerce. All of which the idea is to ensure that you reach or access through a single app on your phone. Orange juice prices hit all-time highs. So we've talked about so many commodities, including gold, silver, copper, and of course the stock markets themselves hitting all-time highs. Now it's the turn of orange juice prices, which have climbed to fresh all-time highs amidst persistent supply constraints, pushing the industry into crisis mode and forcing some makers to consider alternative fruits, CNBC is reporting. Prices of orange juices have been climbing rapidly in recent years thanks to declining output from Florida, the main producer of orange juice in the United States, and climate-fueled extreme weather in the main orange-producing areas of Brazil. Brazil is the world's largest producer and exporter of orange juice, which means it plays a very influential role in shaping the global industry, CNBC said. The benchmark frozen concentrated orange juice futures, yes, there are futures for this, traded on the Intercontinental Exchange in New York, closed at about $4.7 per pound on Wednesday, which is apparently double the price that was registered a year ago. CNBC quotes analysts saying that Brazil typically produces about 300 million boxes of oranges each cycle, though climate change has dramatically reduced production of that crop, and climate change is obviously making extreme weather events more frequent and more intense. According to them, intense heat waves in Brazil occurred at a critical phase of flowering and early fruit formation between September and November last year, substantially hampering production. If all of this is happening in Brazil, it's obviously happening in other parts of the world. And as we've seen happening in India as well, we've already seen this impacting crops of many kinds and vegetables. And obviously, fruits could not be further behind. But more on this when we get data and specific insights soon. Air passenger demand continues to grow. The International Air Transport Association has said that April 2024 global passenger demand, measured in revenue passenger kilometers or RPKs, was up 11% compared to April 2023. That's obviously for April 2024. Now, international demand rose about 16% compared to April 2023. Capacity was up about 15%, and load factors were higher at about 82%. Passenger demand has now been growing for 36 consecutive months, says IATA. And it also says that as we enter the peak northern summer travel season, there is every reason to feel optimistic for a strong summer, with airlines offering a wide range of travel options. And before we go, some feedback from our listeners. Renu on Spotify says she really enjoyed this episode, referring to episode 296. Ramana says on YouTube, great show. He refers to episode number 298. And Raghu, again on YouTube, says very interesting inputs, referring to episode 287. We do get a lot of feedback on various platforms. We try and take them, or we will try and take all of them here, but we do always look forward to your feedback. And you can also write in to me at govindraj@thecore.in. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.